Well, good afternoon and good morning to our call participants from the US, and welcome to our Deutsche Telekom quarterly investors call. My successor Hannes Wittig and myself, we have the pleasure to host this call jointly, and as always are here with our Group CEO Tim Höttges and our Group CFO Thomas Dannenfeld to discuss the quarter with you. We always start, as usual, with a quick presentation by Tim and Thomas, followed by a 30-minute Q&A session. And by the way, you can either hand in your questions via Twitter, as it has been the case in previous calls, but you also can now directly type in a question on the webcast without leaving the webcast or dialing in. So that's another innovation from our side. Please also note that you'll find the disclaimer, as always, in the presentation. And without any further ado, let me hand over to my CEO, Tim Höttges.
Yeah, thank you, Stefan, and welcome everybody. Let's make it quick. I know all of you have already looked into the deck. I think overall I could say we have shown a very disciplined execution on what we have showed at the Capital Markets Day. And overall we delivered quite solid quarter with good momentum on the customer propositions. And we even, are able to confirm our guidance. Financially, we delivered a strong set of results, and we are well on track to reach the full year guidance. First, we delivered organic revenue growth of 4.7% for total group. The headline revenue growth was even stronger at 13%, here benefiting from the strong US dollar. Q2 adjusted EBITDA grew 11% to 4.6 billion. Organic year-on-year growth was 5.6%. Our adjusted net income grew 77% to 1 billion. Please note that both our adjusted EBITDA and the net income benefited from a 175 million one-timer. On the free cash flow level, we delivered 0.9 billion euros, well on track for our full year target of around 4.3 billion. Our full year guidance for around 18.3 billion EBITDA and around 4.3 billion free cash flow remain unchanged. Again, our guidance is based on last year's average exchange rate, and for this year we would translate that into 19.3 adjusted EBITDA at today's dollar spot rate. Please note that our unchanged 2015 adjusted EBITDA and free cash flow target exclude the 175 million one-timer I already mentioned. To the segments. In Germany, I think overall I like to say that we are showing a very strong customer momentum, both on mobile and on fixed. But for me, especially the performance on broadband net adds and on Magenta 1 was stunning. We are executing on our integrated network strategy, increasing our LTE coverage to 82% of POPs and our fiber coverage to 46% of all households, which is an increase of 8 percentage points year on year. Our broadband net adds were the strongest in years, and the numbers of customers on our fiber network increased by almost 500,000 just in this quarter, which is double the growth of the prior year. We further accelerate our total IP migrations to 1.1 million only this quarter, taking the total to close to 7 million IP-based lines, or 29% of the total, up from 14% a year ago. So even here, well on track for our target to migrate the whole network by 2018. Our Magenta 1 convergent proposition, which we launched last September, continued to prove very popular here in Germany. We added 400,000 new Magenta 1 customers in the quarter, taking the total of 906,000 customers here in the base. And we are able to achieve growth in total household ARPU, which is even something we appreciate. In mobile, our focus on network quality and upselling is clearly paying off. We further increased our service revenue market share in a market that has now returned to overall growth. Coming to the US, after the announcement of our US team, the share price improved nicely to $34.6 due to the great development. The team in the US is doing a great job in all regards. We had another outstanding quarter of customer acquisitions while achieving record low churn. The postpaid phone churn was down to 1.3% in the quarter, so down from almost 1.5% a year ago, which is the best ever at T-Mobile US. Our LTE network now covers 275 million POPs, and we will reach 300 million people by year end. The integration of the Metro PCS network is way ahead of plan, and the new 700 MHz frequencies covering 60% of the US population, they are beginning to go live. With 1.8 million net adds, we delivered the 8th consecutive quarter with more than 1 million net adds, and were able to raise the full year guidance for branded postpaid net adds. We now expect 3 to 3.5 million net additions, up from 2.2 to 3.2 million from our original guidance. Our US revenues grew 12% in the quarter and our adjusted EBITDA by 18%. Despite the substantial increase in our subscriber growth guidance, we remain committed to our EBITDA and CapEx guidance for the US business. Now let me come to Europe. Our industry-leading IP migration continues at rapid pace, and we will now reach 40% of homes. Our LTE network already covers 53% of the population in our footprint. We continue to innovate the customer experience, for instance, through the launch of convergent Magenta 1 plans in Slovakia, of fully flexible mobile plans in the Netherlands. Positively, the European business was able to moderate revenue declines to only minus 0.6%, and the EBITDA declined to only 2% in this quarter. At T-Systems, the master plan, our restructuring program, is well on its way. We are seeing encouraging progress, especially in the market unit. Revenue momentum is stabilizing, accompanied by a meaningful improvement on profitability. So to quickly summarize our Q1 headline financials. First, strong headline and organic sales growth, driven in particular by the excellent momentum of our US operation and our German mobile business, both in terms of service revenues and handset sales. Second, adjusted EBITDA growth of 11% continues to reflect strong US momentum and cost-cutting efforts. While this performance benefited from a one-timer related to a settlement, we believe it is important to appreciate our accelerated investments into our infrastructure, the IP migration, and the upselling of our customers towards higher value services. Adjusted net profit grew strongly as well, also benefiting from the mentioned settlement, but also the reclassification of EE as an asset held for sale. Meanwhile, our reported net income decline is explained by last year's successful disposal of Scout24. Our free cash flow of 0.9 billion reflects a meaningful increase in cash capex. The settlement I already mentioned did not contribute to free cash flow in this quarter, this coming in the remainder of this year. The increase in our net debt is primarily driven by the acquisition of spectrum in the US and the strong US dollar. You should know this is a translation risk. With our self-funding strategy, the main part of the obligation is always, getting repaid in the US. In summary, we were all happy with this quarter. In operational terms, we are able to accommodate major long-term investments while achieving some very strong customer metrics and confirming our full-year financial guidance. We see that the investments into broadbands are paying off. Customers are really taking the offers. With this, I'd like to hand over to Thomas to provide you with more detailed review of the quarter.
Yeah, thank you, Tim. Let's move to the operational and financial details of the quarter, and as always, let's start with Germany. I think we're really happy with our performance in Germany in the quarter. German revenues grew by 1.9% year-on-year, driven particularly by good momentum in mobile. Positively, the German market as a whole is growing. Our mobile service revenues grew by 2.8% year-on-year, again faster than the peers, and a further improvement compared to an already strong last quarter. While these numbers should not be extrapolated into the coming quarters due to more difficult comms and Magenta 1 discounts, we are confident for the rest of the year, and I think we certainly will outperform the market in 2015 here again. Our mobile revenues further benefit from very strong growth in equipment sales, mainly due to retention activities, but also an exceptionally high volume of spot handset deals. Core fixed line revenues declined by 2%, continuing the steady improvement of the previous quarters. Our wholesale revenues declined by 1.9% year-on-year, similar to the Q4 performance, impacted by the decline in unbundling fees and regulatory effects, while demand for fiber is contributing positively. The adjusted EBITDA declined by just under 1% year-on-year in the quarter. This is in line with our expectations and should be seen in the context of strong upselling activities, strong growth in fiber, and also an accelerated all-IP migration. The adjusted OpEx in Germany increased by 3.6% year-on-year, driven by these investments and the mentioned high handset sales. Importantly, indirect cost declined year-on-year. Turning to mobile, we estimate that the market as a whole grew by more than 1% this quarter. Within this growing market, we continue to increase our revenue share, based on peer-leading service revenue growth of 2.8% in the quarter. Due to flat rate packages, it is increasingly difficult to allocate revenues to individual categories, but our data growth remains strong while declines in SMS text continue to weigh on results. Operationally, we continued our strong performance in the quarter. Our mobile contract subscriber count increased by 289,000. Moreover, the split between own branded and service provider customers was impacted by the reclassification of 349,000 Turkcell customers, which are now included in the own branded category. Under our own Telekom and Congstar brands, we added 134,000 contract net adds, slightly below previous quarter's performance. But this again was impacted by the derecognition of 61,000 internal cards. Beyond these superficial adjustments, our momentum remains positive and absolutely in line with our expectations. The smartphone penetration in our own branded retail customer base continued to grow to now 78%, up from 76% at the end of the year, driven by another quarter of very strong smartphone sales. Also positively, the number of LTE customers on our network in Germany again grew strongly to 6.4 million, almost double the number 1 year ago. Our performance in the German broadband market was outstanding. Driven by strongest quarterly broadband growth since the first quarter of 2012, our line losses improved again to only 131,000, our best performance in more than a decade. Our fiber growth continues to accelerate with 463,000 net adds in the quarter, double the intake of 1 year ago. Of this, almost 2/3 came from our retail business. In total, we already have almost 3 million fiber customers on our German network, reflecting growth of more than 1 million in the last 12 months. We added 76,000 broadband customers in the quarter, benefiting from a strong demand for fiber and the success of our new convergent proposition. While it is too early to communicate a new target, we believe we are likely to exceed our guidance of 100,000 broadband net additions in Germany this year. Our TV product Entertain also had a good quarter with 74,000 net adds. Encouragingly, in our fiber areas, our take rate has been 40%. The overall fixed network revenues declined by 2% year-on-year, with the fixed revenues fixed line, as per our backup definition, declined by 2% year-on-year. Within these fixed revenues, we saw a fairly stable year-on-year decline in voice revenues of minus 6.9%. Broadband revenues are also still declining, but improved slightly to minus 2.5%. And meanwhile, our TV revenues grew by 10.4%, similar to the run rate we've seen in Q4. In the other fixed network revenues, we saw the following trends. The decline of 7.9% year-on-year in our variable revenues was in line with the trend of the previous quarters and is mainly driven by price as well as volume decreases attributable to flat rate components. Fixed line add-on options declined by 5.4%, again similar on the fourth quarter. Other revenues, mainly from IT services and devices, grew by a similar 3.1% as in the whole of 2014, but slowed compared to the previous quarter. As mentioned, our wholesale revenues declined by 1.9% year-on-year, similar to the Q4 performance, impacted by the decline in unbundling fees and regulatory effects, while demand for fiber and network services are contributing positively. As we discussed at our recent capital market days, we're accelerating our investments in high-speed infrastructure. By the end of the quarter, we achieved 46% fiber household and 82% LTE coverage. We added 0.7 million homes to our fiber footprint in the quarter, extending the coverage to 19.4 million homes. Vectored VDSL is now available to 3.5 million homes. With this, we are well on track towards our stated targets. In the quarter, we migrated almost 1.1 million retail and wholesale lines to our all-IP footprint. We now already have 6.9 million retail customers on this platform in Germany, corresponding to 29% of our total lines. This is double the number of 1 year ago. We are well on track towards our 2018 target. Let me now summarize the highlights of the quarter for T-Mobile US, as all relevant numbers we already reported and discussed by our Team US colleagues 2 weeks ago. We had another outstanding quarter of customer acquisition while achieving record low churn. Postpaid churn was down to 1.3% in the quarter, down from almost 1.5% a year ago, and the best ever at T-Mobile US. Porting ratios remain favorable and have improved since the end of the quarter. Our LTE network now covers 275 million POPs, and we will reach 300 million people by the end of the year. The integration of Metro PCS network is way ahead of plan, and the new 700 MHz frequencies covering 60% of the US population are beginning to go live. With 1.8 million net adds, we delivered the 8th consecutive quarter with more than 1 million net adds, and were able to raise the full year guidance for branded postpaid net adds. We now expect 3 to 3.5 million branded postpaid net adds, up from 2.2 to 3.2 million. Our US revenues grew by 12% in the quarter. Service revenue grew by 9%, despite a one-off accrual related to the launch of our data stash proposition. Without this accrual, service revenues would have grown 11% year-on-year. Despite the strong growth, T-Mobile US was able to grow EBITDA by 18% year-on-year. Importantly, while TMUS has substantially raised its postpaid subscriber growth guidance, we maintain our stated EBITDA and CapEx guidance for the US business. Back across the Atlantic, our European segment was able to moderate revenue declines to only minus 0.6% after a decline of 3.4% in the previous quarter. This again benefited from last summer's first-time consolidation of GTS, but also reflected the planned unwind of our hubbing business, which we announced at the recent Capital Markets Day, and which negatively impacted revenues by 35 million in the quarter, and ongoing regulatory pressures. Only adjusting for the GTS acquisition, organic revenues declined by 2.9% year-on-year. Further adjusting for the unwind of the hubbing business, revenues declined by 1.6% year-on-year. On a country basis, we are particularly pleased by our performance in Hungary and Austria. Despite the challenging macro environment, Greece was able to generate stable revenues and slight EBITDA growth. Meanwhile, our Dutch business is impacted by intense competition and the rollover of the split contract launch. We are responding to this challenge through innovative product offers and through what we believe is a superior mobile network proposition. On a reported basis, the adjusted EBITDA in the segment declined by 1.9%. Organically, the adjusted EBITDA declined by 3.8% year-on-year after a decline of 4.7% in Q4. More than half of the decline was the result of regulation. We are on track for our full-year targets here. We made good progress towards the targets we presented at the Capital Market Days. 40% of the lines are now on an IP platform, up 11% within the year. Our LTE network now covers 53% of the population, up from 38% 1 year ago. Our TV as well as broadband customer base are continuously growing, while our mobile contract customer base show a stable year-over-year development. Moreover, our share of fixed revenues from connected home grew by 3% to 25%, especially driven by Hungary and Greece. Turning to System Solutions. Our results reflect our ongoing restructuring at the market unit, as well as continued cost savings delivered by Tel-IT. Gross revenues declined by 2.5%, substantially improved from -7.1% in the last quarter. Positive exchange rate effects contributed 2 percentage points in that quarter. Positively, our market unit achieved 1% revenue growth, corresponding to a decline of only 1% without exchange rate tailwinds. System Solution EBITDA grew by 11.6% year-on-year, or 8.7% organically, reflected a positive performance from the market unit, which posted a 44% year-on-year increase, benefiting from an improving product mix, efficiency measures, but also somewhat easier 2014 comparisons. Let's move to our group financials for the quarter. Turning to free cash flow first. Group free cash flow was down 12% to 865 million in the quarter. While quarterly cash flows can be seasonal and volatile, the most important message is that we think we are absolutely on track for our full-year guidance of around 4.3 billion. Main drivers were a 428 million increase in cash generated from operations, mainly due to our strong EBITDA growth. This was offset by 464 million higher cash capex driven by investments in Germany and the US. 82 million higher other effects, mainly reflecting higher interest payments. And importantly, this quarter's free cash flow does not include the 175 million we booked in our adjusted EBITDA due to a legal settlement. Group net debt increased as anticipated to over 46 billion at the end of the first quarter, with the biggest moving parts being the 1.9 billion spectrum cost for the AWS spectrum in the US and foreign exchange effect of 1.9 billion due to the strength of the US dollar. Our adjusted net income increased by 77% year-on-year in the quarter, was mainly driven by two effects. The contribution of 175 million from the settlement we already mentioned, and a 259 million year-on-year impact related to the reclassification of EE as an asset which is now held for sale. Finally, we turn to our balance sheet ratios. We are currently at 2.6 in net debt over adjusted EBITDA. This reflects our investment, but it's also the result of currency and especially the effect of translating the balance sheet at spot rate and the P&L at average rates. If we were to use the same exchange rates, then the ratio would be below 2.5 times. While we expect to stay over 2.5 times for Q2 as a result of our example given dividend payment for 2014, we clearly expect to return back to our communicated corridor in the second half of the year. Our rating remains stable at BBB+ and are well within our comfort zone with the ranges from BBB to A-. Our equity ratio decreased slightly year-over-year but improved sequentially. Based on these ratios, we believe we will continue to get excellent funding conditions in the debt capital markets. And I think I'm going to hand over now to Tim for some final remarks.
Look, guys, I think this quarter shows that we are well executing in a disciplined collaboration on our strategy within the group. And we were able to present a quite solid number set here in this session. I think all things are on plan, and for me the most important thing is that customers are really taking up the new propositions and even the high broadband investments which we have taken. With this, I'm happy to answer your questions. Stefan.
Well, thanks, Tim and Thomas. Now we start with the Q&A part. As always, if you'd like to ask a question, please press *1 on your touchtone telephone or hand it in via Twitter, email, or via the webcast. I'll announce your name when it's your turn to ask a question. Should you require to cancel your question, please then press *2. And I think we will be getting started with Emmett Kelly from Morgan Stanley, who asked a question via email. Emmett, you know there is modern technology out there as well, so Twitter and webcast can be used as well. So first question was on Germany service revenue growth. At the Capital Markets Day, you mentioned broadly flat service revenues for 14 to 18. Is this still the expectation given the nice start? The second question is, how much have Magenta 1 discounts impacted the German service revenues in the first quarter of 2015? And I think I'll just hand over for the first part of the question to Thomas.
Yeah, thanks, Stefan. I think on the German service revenue growth at the CMD, I think what we've said is we mentioned that we expect a CAGR of roughly 1% on the mobile service revenue from 14 to 18, and that we are convinced that we can, as we did last year's, outperform the market in our performance. What we've seen basically in the Q1 is that market is doing better than we have anticipated. So market development is better, and we've still, as we said, outperforming the market. I think is an awesome development we see in here on our numbers with the 2.8%. And as we also mentioned in the capital market days, it is obviously a very conservative view, so there might be some upside. On the Magenta 1 discounts, I think what we still, it's an early phase, but what we can say is it's a very successful proposition, number one. Number two, we mentioned in capital market days that after transaction we see a €4 increase, not a decrease, so we see overcompensation of the discounts. And what I can tell you is that the trends we are seeing are improving, which is good to see. Yeah.
Well, thanks, Thomas. And then we move over to Tim Boddy from Goldman Sachs. Tim, please.
Yes, thanks for the question. I wanted to just focus a little bit on two things. First of all, your broadband net adds. You mentioned that there could be upside to the 100,000 guidance in the year. Do you know at this point how much of that weakness can be attributed to the significant jump in churn at Unity Media? And obviously they've given guidance for a sharp improvement for the remainder of the year. So is this a temporary thing, or are there some more structural factors? I also wanted to ask a more long-term question. It seems like the pan-European consolidation idea is gaining momentum, both at the regulatory and at the corporate level, and there are more companies talking about it. You were very clear at your Capital Markets Day that you want to validate the IP strategy before doing anything, but at the same time, it's possible opportunities could arise quicker. And if that was the case, would you be willing to consider a cross-border transaction? Thank you.
Hi, Tim. First question. Indeed, with regard to the weakness and churn of the cable operators, this might have helped us to hit the almost 80,000 broadband net adds in the first quarter. But look, we are still conducting a detailed analysis of the reportings here and the portings in this broadband area. So definitely it might be the case. The second is we are not, fighting on pricing here. That is, from our side, very important to say. It is about the proposition. It's about the additional functionality. It is about the branding. It is about even the convenience for consumers. And it's even, the way how our channels are performing these days. But we have absolutely stick to our rational pricing strategy we have laid out. The last topic, we had 3,000 Vovi net adds in the first quarter. So we cannot confirm taking over of those customers yet, but even here, we see some benefits. Now, coming to the second part of your question on the pan-European consolidation idea, is that gaining momentum? Look, I think it was Deutsche who mentioned first that there is more than just the intermarket consolidation. It was always our intention to prove to the market first how cross-border synergies are going to work. That was the reason that we, as the first player in this European environment, started this pan-IP network. By the way, we are moving ahead quite quickly here, so things are moving. That said, there's still some proof out where we are working on. I always said that I believe that at one point in time the European market consolidation is taking place. I think we threw the first stone into the water with our merger in the UK and bringing a fixed mobile player together, where we believe that we should stick to the shareholding in this company than rather buying it up. And therefore something is to come, but there's no change to our strategy towards consolidation and acquisitions here in this regard. We have created optionalities with our minority shareholders. We have said we consider intra-market consolidation. We are considering small acquisitions in these markets, and we are even, consider smart buyouts of minorities. But nothing has changed in our strategy.
Thanks, Tim. And as you just mentioned Deutsche, then I think it will be appropriate to hand over to Robert Grindle from Deutsche Bank. Robert, please.
Yeah, hi there. Thanks very much. I'm a bit depressed to be using such a low-tech way of asking my question. I'll improve next time. Just going back to the cross-border evidence of synergies, I think some of your European countries were connected with IP since early March. Are there any early lessons for this exercise in cross-border cooperation? And secondly, in Germany fixed, your voice revenue growth deteriorated quite heftily, the growth at least, in Q1, and it pretty much offset the boost you got from broadband. Is this just a Magenta 1 effect, a bundling effect, or is there something more significant going on with your voice revenues? Thank you.
Look, Deutsche Telekom is driving very consequently that we not developing things twice in the group, that we are using the same applications, the same technologies, and that we are even developing services within our footprint. I just could talk about the partnering concept as well, but I think this is moving ahead quite nicely. To give another example, we are launching Magenta 1 in now a lot of markets where we have fixed and mobile, as we have it here in Germany. Now, with regard to the cross-country synergies, it's 3 months ago, then we gave you a detailed overview about for instance, the cloud VPN services, about the SDN, about, let's say, applications, about the development of our TV platform, and the cloudification behind that one. We're still working on this. It's an execution thing here. And there's nothing to add to what we have mentioned here. There's still some more work to do.
And may I just add the number we've mentioned at the Capital Market Days in terms of the synergies. We said there is a 500 million ticket on the OPEX in a steady state on Europe, where 30% roughly is coming from cross-country. So I think there's no news on that one. Maybe I take the second question as well. On the voice, there is basically no news compared to the quarters before. So there's no other development than what you have seen the quarters before.
Thanks, Thomas. Let's move on with Dominic Klarmann from HSBC. Dominic, please.
Oh, yeah, thank you. Just on Liberty Global talking about potentially a significant new build outside its footprint in Germany, similar to what Virgin Media is doing in the UK. I guess it suggests Liberty is very upbeat about the German competitive and regulatory environment, but just interested in your thoughts on that news. And then a clarification really on the Magenta 1 and the bundle discount. My understanding from the Capital Markets Day was that you were able to grow ARPU per home by about €4, basically by adding new SIM cards, so gaining new RGUs, but that with the existing mobile and fixed line subs, you were only able to offset about half of the €10 headline discount. So you're basically accepting a €5 revenue loss for those existing customers. I'm just checking if that is the right understanding and how you see these metrics now developing in Q1 as you added another around 500,000 customers. Thank you.
Yeah, Dominic, this is Thomas. I start with the second question. I think then Tim comes back to the Liberty Global question. First of all, your takeaway of how Magenta 1 works, that on the existing customers we're giving discounts and we're not able to completely fully compensate them per se, but the compensation and the better revenue comes from adding SIM cards or adding fixed line products into the complete bundle is correct. I think at the Capital Markets Day we said we can offset 50% roughly of the discount purely with add-ons we're selling. That has improved more to a 2/3 of compensation. And as I said, the cross-selling elements of selling new SIM cards into the household, or even also selling to mobile-only customers on fixed line, that has improved as well. So overall, that €4 has improved and the share of compensation has improved. But you got the math right at that time, yeah.
Just follow on. I mean, given the pricing from cable and mobile competitors, is there discussions about reducing that headline discount of €10 at all?
Yeah, I think basically what we have done is that we where from a competitive point of view it was acceptable. We reduced promotions. We stopped those kind of elements in the first instance rather than the discount being on the fixed line side or at the mobile side.
I'd like to come back to this Liberty plans and the fiber to the home issue. And I'd like to share some maybe emotional moments with me, which I always witness in Germany. In the summit of our Minister of Infrastructure, all carriers and operators were sitting there, including the cable operators, and they were asked what is their commitments towards the broadband build out in Germany. And there was a number which was thrown into the room, which added up to 8 billion. And then the minister asked the question, okay, who is committing to its number? And there was only one guy in the room who said, I'm investing around 4 billion into infrastructure in Germany throughout 2015, which was Deutsche. None of the others were really clear on committing a number because they always, had this kind of prerequisites, which they have in their business case. What I learn now is that people are starting to understand that we are serious on what we have said. And you have seen that even with the uptake in Germany, up to 908 million just in the first quarter, going into infrastructure here in the German environment, we stand to our commitments and we deliver on the targets which we have in mind. So we want to achieve 80% fiber coverage by 2080, and we are well on our way in this regard. And by the end of this year, by 2016, we will have fiber coverage in most of the cable footprint. So we are catching up on that one. Now, if now Liberty and some others are coming up with the idea on building their own fiber, look, I'm a big supporter of broadband infrastructure investments in Germany. So therefore, I'm not afraid about that one. Second, I'm just coming back from a journey to Israel where I've met 48 venture capital companies, startups, and even technology leaders. And I could tell you there's more money these days going into the upgrading of copper than money is going into fiber development. The last things which I've saw is line cards which you put into the street cabinets, which are enabling G.fast immediately, offering broadband coverage of 500 megabit per second. Now, and by the way, with 96 line cards, so with everything is possible in this regard. So I could tell you there are a lot of opportunity to upgrading our infrastructure in the street cabinets quite soon. So therefore, I'm more convinced that our strategy is totally right. Now, accelerating the broadband build out across Germany rapidly, first to vectoring, VDSL with 50, then to vectoring with 150, then to super vectoring with 250, and then with G.fast we might achieve, more than 500. And I could tell you what I see, it's coming quicker than we expect. On top of that, we combine it with our hybrid router and the bandwidth we have in the mobile network, already achieving something around 250 megabit. And then I think even the cable operators might then start thinking about whether their huge advantage, which they're always trying to claim on broadband, is still valid. So I think we have a clear strategy going forward. I think it is, even from a commercial perspective, and from a time-to-market perspective, the right thing to do. We are not going into the ReggiFiber failure example, or that we're going now and trying to reduce our tariffs just, because we are trying to invest into the infrastructure, upgrading it, and what we see is uptake 12,000 on the hybrid router, more than 560,000 on the broadband side and net add side. So we see there is a huge uptake on our promotion these days.
Thanks, Tim. And let's move on with Roshan Ranjit from Nomura. Roshan, please.
Good afternoon. Thanks for the question. Just one quick one, going back to the domestic mobile service revenue growth. Now, we've seen essentially two step changes over the last 2 quarters, from flat to 1.8 to 2.8% growth. Could you just detail the main drivers behind that? Clearly, there's an element of upsell in there. Some dynamics around the upselling would be good. And also, I saw a couple of weeks ago you had increased the speeds on offer at the mobile S tariff. Is that to protect against some churn at the lower end of the market that you could be seeing? Thank you.
Look, the first thing is I'm quite happy with the development which we had on service revenues. Not reducing the LTE offers and the prices, just because high-speed prices were looking cheaper. We just were trying to sell our quality into the markets. We have this Magenta Mobile, easy and simple, tariff grid in the marketplace, and it is paying off. The service revenues increased by 2.8%. The voice-only revenues are almost flat. The SMS revenues, as you might know, is shrinking, by the way, by 18.9%. Our data revenues, so people using LTE and the bandwidth, is increasing by 9.2%, and the visitors are increasing by 18% as well. On top of that, we had huge terminal equipment. Thomas mentioned that in his speech, which is not the service revenue part, but which is included in the mobile revenues as a total, which was at the peak volume in this quarter. We have sold more smartphones than all of them, and we have a huge amount of customers now on the LTE network. I think more than 6.8 million, just from my head here, was the number. So you see that this enabling customers with the right handsets into this high bandwidth infrastructure, you do not have to reduce the prices to the lowest in the market. You see even the uptake. The only worry which I have had over the last years was the SMS side, which is due to the over-the-top cannibalization. But I think that is something we have anticipated in our model as well, and it's getting rebalanced by the data revenues.
And to add here on the second part of the question, if there is any Whether that change in the S tariff scheme was related to churn, no, there is no churn issue. There is no change in terms of churn development. Basically, I think what we've done is we've removed some promotional pricing elements at that time, added some more value into the schemes because we removed the promotional pricing. And I think overall what you always should expect is, driven by technology, that year by year, for the same price points, you will get more volume and more speed. That's a kind of nature of our business, I think. But back to your question, there's no churn issue behind.
Thanks, Thomas. Let's move on with Peter Kurt Nielsen from Kepler Cheuvreux. Peter Kurt, please.
Thank you very much. Two questions, please, on Germany. One on mobile service revenues. Has already been discussed, revenue growth is accelerating. Can you talk a bit about, give us any data points on what you're seeing in terms of the uplift on a 4G user versus a 3G in terms of usage or spend? And assuming that growth here in the mobile service revenues will indeed be higher than you have perhaps expected, could you envisage yourself accelerating the rollout targets for 4G pop coverage, which you gave us at the Capital Markets Day? And secondly, just on overall revenues in Germany, obviously strong plus 2% in Q1. I appreciate that the year-on-year comps become more challenging in the second half, and probably the handset sales in this quarter are unlikely to be replicated in the coming quarters. But do you now consider it realistic to achieve your target for revenue stabilization already this year, a year ahead of your target for stabilization in 2016? Thank you.
I think I'm going to start with the last part of your question, whether we see already revenue stabilization in this year. As we said after the Capital Market Days, we've been obviously quite conservative on the mobile side. But on the other hand, don't forget the guidance we've given on the broadband revenues being, I would say, aggressive and demanding and challenging. So overall, I think there is a chance, there is more likelihood that we can get there significantly earlier. I don't think so.
Peter Kurt, coming back to your question on the data usage, on the consumer contracts, we see 405 megabit per customer per month. On the business contract, we see 260 megabit per customer per month. The B2C contract customers with LTE devices have 59% more data usage than customers without LTE devices. And that is one of the part of our subsidy policy, because, you know, we have the best LTE infrastructure. We have attractive handsets. That is one of the reasons that we even, trying to push, higher valuable handsets into the base. And then we even see the uptake and the satisfaction of the consumers. I could even further go into the Android and the Apple OS and the BlackBerry and Windows stuff. But honestly, I would guess that this is something where where my team could give you a little bit more insight of the developments of this particularly elements.
And basically, I think we see also good progress when it comes to the monetization of mobile data, because there's actually two paths how we do that. First of all, via the migration to higher tariffs with bigger data allowances, where we see good uptake, especially when it comes to retaining customers, us upselling customers. Magenta 1 actually helps quite a lot in that. Secondly, through data options like Speed On, where we actually now sold until the first quarter of 2015, 3.7 million packages, which is basically almost doubling year over year versus first quarter 2014.
Thank you very much.
And then I think we can directly move on to Polo Tang from UBS. Polo, please.
Yeah, hi. I just have one question, which is just on German EBITDA margins. Because if you look at EBITDA margins, they seem to have decreased marginally year on year. So I'm just trying to wonder how much of this is impacted by the all-IP migration, or was it a case of just basically a high level of iPhone 6 handsets being sold in the quarter? And how should we think about the evolution of the German EBITDA margin going forward? Because if I specifically look at your mobile business in Germany, it seems that potentially you're focused more on retention rather than acquisition. So therefore, can we expect lower mobile SAC going forward, and therefore maybe higher margins to flow through. So really just a question on German EBITDA margins. Thanks.
Yeah, Paul, I think I'm going to start. First of all, you're right. We are focusing very much on the retention part and the upselling part of the business. That's why you've seen also on the numbers an uptake year on year on the CRC, so the retention cost. For us, in terms of the steering, we are focused on getting a better payback per customer. So not per se getting the SACs and CRCs up or down, but getting a better payback. So if a customer pays more per month, we are willing to spend more as long as the payback is declining. And that's what we're basically seeing. We're spending more in absolute terms, but we're getting the payback periods in a better shape. That's one element which was somehow a little bit pressing on the EBITDA margin in the German environment in Q1, which should give us a good momentum on the revenues then looking forward. And I think the second element is IP migration volumes. I mentioned that we doubled the volumes. We are ahead of what we originally planned in terms of the volumes for this year. It's a little bit like, in Germany, sometimes it takes some time to get the machine run, but once the machine is running, you can't stop it. And that's the situation we're having right now. But obviously that comes with some cost as well here.
Now, color in terms of how much the cost was in terms of all IP migration in the quarter. Thanks.
Well, we have to come back to you because we usually don't give that out on a quarterly basis. Also doesn't make sense, but we'll try to look it up and Andreas will get back to you on that. Tim, I think you wanted to add something on the OPEX?
No, I just wanted to change roles with Thomas. You made the general question and I'm now playing the CFO. I love that. We had an OPEX increase by 119 million in that quarter, of which 186 million, coming from higher direct cost, mainly driven by 64 million from mobile SRCs, driven by Magenta 1 and volumes, and 111 million driven by mobile devices. As Thompson managed, that is the responding or apart from the high volume spot market deals which we have driven this market. And then we had the decrease on the lower indirect costs. Interesting, we had 69 million higher personal costs. And this is the part where you refer to, which is mainly coming from the IP migration volumes and the Magenta 1 orders. On top of that, we have even increased our technical field force and the customer service people because 2014 we had some servicing issues, as you could recall. This thing is healed and handled now properly. All service levels are green. That is due to additional temporary trainees and temporary workforces, which we have on top of the workforce which we handled. Now, this 69 million were overcompensated by savings in IT and savings on G&A. So therefore, the indirect cost, went down by 33 million.
Back to the roots. Let's move on with Simon Whedon from Citigroup. Simon, please.
Yes, thank you for taking the question. I wondered if you wouldn't mind going back to the sort of German broadband market and whether you could give us some more colour on the difference, the sort of proportionate differences between ARPUs for a fibre customer, ordinary ADSL retail customer, maybe a wholesale customer, and add some colour on whether you're seeing fibre customers tending to take more RGUs in terms of triple or quad play. And the other question was whether you thought the United Internet bid for a part of Drillisch could lead to a change in the dynamic in the industry longer term, as you may have another integrated operator sort of emerging out of that longer term. Thank you.
Look, I'd like to start with the United Internet question and the Drillisch part here. It's interesting, by the way, what is happening now. I honestly, you should ask Ralf Dommermuth on this subject, or the Kolidis brothers here, what this deal is about, and you might get different answers on that one. I could answer it offensively by saying the complementary nature of their businesses, there are likely to be some operational and commercial synergies over time between these two companies. Drillich is a company which is acting offline. Drillich is a company at the lower end with their market and branding proposition, and historically they were always on the SIM-only business. United Internet is the opposite. They are an online player. They are at the higher end of the market, and they are handset-based. So this could be, let's say, a complementary combination of these two businesses. If I look at this more defensively, I think it could be even a hedging strategy for United Internet for its mobile business, because looking to what's going on there, it is very hard for them to get a 4G proposition. Deutsche Telekom is not offering LTE for wholesale providers. We're even not offering it to Kongstar. I do not know what Vodafone is going to do, but at least so far I haven't seen that 4G access were given, and therefore the only reminder player in the market is O2. And if they're not, getting this opportunity, it might be that with Drillich they could get something of the 30% of the total volumes which were imposed as remedies on the merger of E-Plus and Drillich recently. So therefore, it is there are different answers to the same situation. I cannot believe that United Internet might be a minority player forever, but this is my private and personal view on that one, as these I have seen them acting in the past. But please ask the respective managers on this subject in their companies.
I take the part on the question of the new customers coming in on the broadband side. So, what about the quality and the ARPA they have? First of all, I think there are two basic drivers for the net adds we're seeing right now. And that's what we already said last year, that we expect that to kick in during the course of this year. That is the infrastructure build-out, and it is Magenta 1. On the infrastructure build-out, there is an upselling element in the proposition per se, because if you get more speed, you pay €5 more per month. So that's the first upselling element in the whole game. Then the second upselling element is the take rate on TV, is a TV proposition. We have a take rate of, as we said, 40-50%. Last quarter was 40, so it's bouncing in that on that level. And obviously that is very much driven. You've seen that 74,000 net adds on Entertain, very much driven by the new customers we're adding via the new infrastructure. And then the second element, as I said, is Magenta 1, where there is a discount element, and there is as Dominic asked already, there is roughly now 2/3 of compensation on the core products of that discount by additional products we're selling in. So basically 3 levels of upselling. First one is more bandwidth, €5. Second one is television, €5. And the third one is, if it comes to Magenta 1, other additional products we're selling in there.
Thanks, Thomas. We move on with another question coming in via webcast from David Strauch from Oddo. Question is, does your expectation of bringing back the net debt EBITDA ratio in your comfort zone by end 2015 include an assumption on cash payment for spectrum auction in Germany? Thomas?
Yeah, thanks, Stefan. First of all, the very simple way to answer it is yes. Maybe some additional explanation around that. First of all, on the spectrum, you need to understand, we all need to understand there is one part, the 700 part, which will not be cash payment relevant in 15, at least parts of it, because there are clearance elements in there, etc. But that's only a minor element. I think, as I said, it is included. You never know whether you're right or wrong in the level you're expecting, but per se it's included. I'm quite relaxed on the whole debate. I've seen a lot of noise in the background on today around that discussion here, and I'm quite relaxed on that one. Basically because there's no surprise. It is like we mentioned, and I mentioned that on the capital market days, development is exactly Like anticipated here, we've seen, or we see and facing in the first quarter, those effects of the US dollar kicking in at a spot rate on the balance sheet and only an average rate on the P&L. That's one element. The second element of the whole equation is that we will outgrow, so to say, the 2.6 back into the range of 2 to 2.5 during the course of the year by the growth profile we will show this year. And I think number three, as I mentioned, also on the capital markets days, our comfort zone in terms of rating is and was BBB to A-, and I think we are well positioned in there.
Thanks, Thomas. Next one is Ulrich Rathe from Jefferies. Ulrich, please.
Yeah, thank you very much. Mobile service revenue growth of 3%, but there were already several questions on it. What I'm wondering is, you are saying this in the quarter, this already contains market share gains. You're saying there will likely be market share gains also in the year 2015, if I remember correctly. Your 4-year plan presented at the Capital Markets Day also included guided share gains. So given that setup, I'm just wondering, at what point do you see a risk of a more violent competitive reaction? Is it not maybe better to simply reduce that share element of the growth, share gain element of the growth? My second question is on the policy announcements from the European Commission. I realize these are very general statements so far, but I'm wondering whether you have any comments either supporting or having additional demands to these indicative policy statements from the Commission that came out recently. Thank you.
Yeah, Ulrich, to the first question on the mobile service revenues. First of all, our steering is not towards a share gain. You know, our steering is towards an increase of the total revenues. That's number one. And number two is, I think what we still seeing here in the market is that we outperform the market because there are two big, very well-positioned reasons to choose our brand and our propositions. That is the outperformance we see on the network quality side, and that's an integrated proposition like we see it with Magenta 1, and people obviously like it. So that is not driven, the whole development so far is not driven by a view on how to steal share, but a good and well-positioned proposition in the marketplace. So I guess the right way to put it is to ask the competitors what they're intending to do to catch up. That's one part of the equation, I think. I think the other one is, as I mentioned, on the market invest, be it new customers or retaining customers, we are keen on improving the efficiency, so getting the paybacks down and working actively towards that. And we've seen that in the first quarter as well. So that's the second part, I think, of the answer. And thirdly, I think what we've seen, and that's good to see, that's the most important element of the whole debate, is the German mobile market as a whole is growing again. That's important to see, because that gives all the market players the room to invest into quality. And by the way, that's what we like, competition on quality.
There's this question on the statements from our Commissioner Oettinger and the Commission here. I think the Commission's priorities here for the new telecom framework review are all, let's say, in the current review process with the different states. On the spectrum policy and management, and on tackling regulatory fragmentation to allow economies of scale for operators has been addressed. The ensuring of the level playing field for all market players, so media or over the top and telecommunication operators under review, and the incentivization of investments in high-speed broadband and the revision of the institutional framework for telecom regulation is as well part of the statements we have heard from the Commission recently. All these priorities address relevant issues for our sector. Therefore, this digital single market idea is fairly addressing the topics, but is even fairly general in substance so far. which shows me that the Commission is still seeking the right answer on these pressuring issues. But what they do is they at least, address them openly, and they have an opinion on that one. I'm positively encouraged about the discussions I've had with these guys, and that they see that they should improve the environment, that the telecom sector is promoted for more investments, especially in the broadband networks. Deregulation and simplification of fixed line wholesale, this asymmetric ex-ante regulation, which we still have in a lot of markets, and you know that it was historically right, but today a lot of question marks around it, and even the harmonization of spectrum policy across Europe is definitely needed. So therefore, I think these are good discussions which are taking place. Now, what is going to happen? I think the EUCOM will start, let's say, first with the single market package which is lying on the table, and they get that at least, this issue of roaming and net neutrality addressed during this year or during the summer. And then our suggestion would have been to say there is a kind of fast-track legislation focusing on the topics which I just mentioned. So we will do everything, to bring our thinking to the tables as well. In this fast-changing telco markets, it is even needed that we need a fast-changing legislation, because we cannot wait for too long before things are becoming effective. So therefore, good discussion, good headlines, still the positions not being defined in all detail.
Thanks, Tim. I think we've got time for one or two more questions, and let's move over with Fred Boulan from Merrill Lynch. Fred, please.
Hey, good afternoon, guys. Thanks for taking the question. Firstly, coming back to Germany, fixed is still declining about 2%. When do you think the take-up of Entertain and fiber will be able to get you back to growth, and any thoughts on content ownership as a differentiating factor? And secondly, just wanted to have your thoughts on the competitive developments right now in mobile in a consolidated market. In particular, how are you seeing VOD and O2 behaving in consumer, but probably more important in corporate segments? And do you think the current price structure in no-frill segment, so at the Star, for instance, are sustainable? Thank you very much.
I start again with the second part of the question, and the question mobile in a consolidated market, how I believe Vodafone and O2 might be behaving, and is the current price structure in no-frill segments sustainable? Look, I think the primarily idea is that everybody is focusing on high quality on the infrastructure. So this is something where we always said, this is more value for money, and not just, price competition here. So I even expect that they're trying to offer their latest services on the infrastructure side and on bandwidth at reasonable prices to better amortize their infrastructure. Second, on O2, there is a lot of focus on the integration from the network perspective, headquarters, and from the sales organization. So I think we expect that TEF will over time reduce the sub-brands in the same segments as the two brands operating when it comes to Türk Telekom and ARDs, for instance, and that they're going to focus their portfolio maybe to a top brand and a lower brand, O2 and brand Blau.de or something like that. So this is something which I would say I'm expecting from Telefonica. I even expect that they might tackle the SME market and the business customer market with more focus, and that they will definitely, let's say, trying to keep their base stable, so focusing on the churn of this merged entity. With regard to Vodafone, look, these guys are playing trying to play the quality game, investing heavily into infrastructure as well. Overall, I even expect a more reasonable behavior even from these guys in a market. This is a quality market, and consumers are willing to pay a bit more if they have an outstanding service, an outstanding coverage. These are the two main drivers for customer satisfaction, as we know, and they both have understood that. So I expect no price battle coming into this market.
Yeah, and on maybe some words, Fred, on the fixed line as well. I think, first of all, the trend is our friend. In fixed line, and I think there are all the key elements we mentioned a year and 2 years ago where we thought improvement needs to be done are now moving in the right direction in terms of looking at the trend. So one element was line losses. It was clear that we need to improve the line losses. There will not be a zero number, but we need to get it smaller, that number, that we can compensate by broadband on one hand. The second one is on the broadband, so double play and television. Remember last year we had a development in this, as we call them, connected home revenues of minus 0.6, driven by B2B was always stable, but slight decline still in B2C and a decline in wholesale, which was a big issue 2 years ago, and last year a smaller one. Now what we're facing here is a stabilization in that complete revenues. So we are now from minus 0.6 last year in the double, triple play revenues across all segments towards zero. Line losses are improving. So I think it's fair to say the trend is our friend. We're doing better than originally expected in those areas. And obviously getting a little bit faster than expected, also closer to stabilization, yeah.
If I may, a quick follow-up on the previous question on the EC. What concrete implications do you expect for Deutsche in the medium term? If you talk about OTT, a level playing field, or relaxed regulation on fiber, what's the kind of ideal scenario for you in a 3 to 4 year view?
Look, the ideal scenario which we are looking at is that we get incentive for broadband build-out. So no further ex-ante regulation and a kind of more stable environment in which we are able to operate from a wholesale pricing perspective. And there are some encouraging moves already active. Just take the German example. We have now 15 cities here in Germany where we are able, without regulation, to offer our promotions and our prices here. So they are going out of regulations in market where no dominance is still existing anymore. So this is one of the pieces. The second one is now, with regard to the over-the-top players, I'm always stressing this issue of interoperability with over-the-top services. Just take the Skype service, the WhatsApp services, and other services. They are totally operating as telecommunication services, but without all the rules which we have. We have emergency call rights, we have the number portability, we have this interoperability to all carriers, we have the termination rates, and all of this kind of stuff. So I think, I'm expecting that they're creating a level playing field. Do I want more regulation? Certainly not. But I'm a pragmatist here, and I think Brussels and the European environment is always, trying to organize things by regulation. So therefore, I'm hoping that we get in a lot of areas a level playing field where we could operate with the same rules as the over-the-top industries here now. Thirdly, I'm expecting, a reasonable roaming regime for Europe. It's not heavily affecting our P&L. But it should be roaming like at home offer, so that we could include our tariffs and use them even abroad within Europe. But if we are creating then a single market where no roaming is existing anymore, then I even expect that the antitrust authorities are not looking on a local access anymore, that they're even, trying to deal the market from a holistic perspective, so that we look at Europe, not from 28 perspectives, but really from another relevant market definition. So therefore, I think this is something which is not coming overnight, but I see the tendency that people in Brussels and even the local regulators and politicians are willing to consider these thoughts, and step by step in this kind of what I mentioned, fast-track regulation, this might help us to improve overall the sentiment that not only the consumer price is in the focus, but even the reinvestment capabilities.
Well, thanks, Tim. And then now let's get to the last question on today's call, unfortunately, because Tim has to run. It's Mathieu Robillard from Barclays. Mathieu, please go ahead.
Good afternoon. Thank you very much. Two questions. First, with regard to spectrum in the U.S., how has your view evolved in terms of the chances of having reserved spectrum for the next auction? And the second question has to do with costs. I think I understand well the dynamics of how costs have moved this quarter. It makes all the sense to invest in market growth. But I was wondering if for the rest of the year, there are some elements that could lead to a lower growth in costs or even a decline in cost, ignoring the costs that are linked to revenue trends. Thank you.
Let me say, we have always said that we intend to be a participant in the broadcast incentive auction. Low-band spectrum remains a high priority for us in the US. On the timing of the broadcast incentive auction, we want to see it happen as soon as possible, since it is an event to level the playing field here. 75% of the low-band spectrum is in the hand of the big two. I think Chairman Wheeler seems to be focused on driving this to a success in the first quarter 2016, and we think that is the likely time frame we could expect. We believe that a robust spectrum set is very important for the incentive auction in order to avoid a situation where the auction is dominated by just two carriers. And therefore, we would like to see a reserve of at least 40 megahertz with no one person getting more than 20 megahertz in this auction. So this is, let's say, what we are working on in the US, and I hope that is possible to happen.
Yeah, and from my side on the costs, I think looking at the cost development in Q1, there is one very obvious element which is very much driven by seasonality and seasonal effects. It is a relatively high cost basis on the development on the GHS, on the headquarters here. I think you should expect that this will normalize during the course of the year and obviously will reduce that level. I think there is on EU, 2014 was a very strong decrease versus 13 because of a lot of extraordinary programs we started. We will not see the same rate of decline in 15 like in 14, but there will still be a relevant one. And I think on T-Systems you should expect, we've seen in the market unit already a decline. We should expect that to go on as a part of the master plan. So I think the main and key element, Mathieu, is really on GHS, that you should expect that to not to happen again, so to say, in Q2 to Q4, but change during the course of the year.
Sorry, if I can follow up. And with regards to Germany, would you add any comment there?
Germany, as Tim mentioned, as he was for a minute again taking over the CFO role, the indirect costs, they have been reduced in the first quarter. So there was an indirect cost reduction on Germany already, but the direct costs, I think that was the part of increase. And that was not only driven by market invest, but also by a very high level of handset sales and spot deals. And I guess we will not see that level again. So there will be a decrease here as well. Yeah.
Thank you, Thomas. This is now Hannes here. Ladies and gentlemen, the conference is now about to end. We know there are further questions, but with these questions, we will kindly ask you to contact us at the Investor Relations Department. On a personal note, this is now Stefan Eger's last results call. I would like to thank him very much for the excellent IR department he leaves me behind. I'm looking forward to working with you going forward. As for Stefan, I wish him very well in his new role as CFO of our Czech business.
Yeah, and obviously I need to say, Stefan, I will miss you as well here on the board. Okay, thanks guys.